Wall Street analysts are going crazy raising price target for MicroStrategy, and we're not talking about 10-20% here and there. We're talking about substantial raises. Canaccord Genuity raised their price target from 300 to 510 a share. Bernstein had their target price at 290, now it's 600. And Benchmark, who had a very bullish $450 a share, has raised their target price to a record-breaking $650 for MicroStrategy stock. So we think the analysts have started to understand the genius behind the MicroStrategy, strategy in spending their money and actually buying Bitcoin, and the genius behind how the company raises money from the investors. And we're going to talk about all of this in this video. This strategy is now known on Wall Street as the infinite money glitch. One more thing that's driving all the hype is now analysts started to realize that in a decade, MicroStrategy can own something like 4% of all the Bitcoin in the world. So imagine that, owning 4% of the assets that's getting appreciated over the years. And here's the twist, MicroStrategy is not your typical company. We're not gonna talk about shares or profits or margin. We're not gonna value the company based on PE ratios or something like that. The company is now operates in a totally different model, what they call the Bitcoin treasury model. And some calling it the closest thing to a Bitcoin bank that exists today. Hey there and welcome to the Market Monkeys channel. My name is Vadim. Today we're going to talk about MicroStrategy and how they invented getting money out of thin air and distributing this money to their investors. But first, let's talk about the news of MicroStrategy. So recently they have bought another 55,500 Bitcoins in the span of 1 week. And that's a whopping $5.4 billion which they have invested in Bitcoins, bringing the total value of Bitcoins that they have right now to 386,700 Bitcoins. So let's take this number into perspective. They have been buying Bitcoins recently at the price of $98,000 per coin. So they are buying kind of at the top, but the average price for MicroStrategy is $56,000 per Bitcoin. To buy all of that, the company raised between $2.6 and $3 billion in convertible bonds and $2.5 billion in issuing their own stock. As of November 24, 2024, the company has another $12.8 billion in stock, which they can issue to, buy back the Bitcoin. If you find this information valuable or interesting, press the like button and subscribe to our channel. Most of the people who criticize MicroStrategy are claiming that this is just a failed software company who in 2020 decided to buy a bunch of Bitcoin and got hyped on Wall Street bets. But right now I'm going to tell you about how this company actually creates value. And the metric you need to keep in mind is totally new and maybe kind of weird, but just keep that in mind. And the metric I'm talking about is Bitcoin per share. One thing that we need to know on which kind of the whole business model of MicroStrategy is based is premium to NAV. Premium to NAV is premium to net asset value. So currently the company has X amount of Bitcoin, but market prices the whole company at 3x. And now let's take a very simple example. So we will take a company which has overall 50 shares and holds overall 50 Bitcoins. So each share holds on average 1 Bitcoin. Let's assume the value of each Bitcoin is $10 per coin. We have said that the premium to NAV is 3, so the market cap of the company is 50 times 10 times 3, so $1,500, which means that each share costs $30. Now, what this company does, it goes out and issues 50 more shares and sells them at the money. So the value of each share is $30 and they are issuing 50 more shares, selling them for $1,500. For this money, they can buy 150 more Bitcoins. Now let's pause and take a look at what happened. Now we have 100 shares, right? 50 plus 50 they have issued. We have 200 Bitcoins, 50 at the beginning, 150 we have bought. How many Bitcoins on average we have per share? So now we have 2. So the company came out, diluted the stock, and everyone just came out better after the dilution. And this is exactly what MicroStrategy is doing. They're going out, issuing debt or issuing more shares, buying more Bitcoins, and every time they're buying more Bitcoins, you have more Bitcoins per share. So now at the end of all of this process, each stock has on average 2 Bitcoins. So now we can see that the value of each stock is already $60 per share. And that's how they have created value for each shareholder, old and new, out of thin air. This is one part of the strategy of the company. So the first part is this chest of Bitcoin, for which the company has a premium to its NAV, to its net asset value. And think of it like this. MicroStrategy right now has a chest of $35 billion in Bitcoin, but the market values it at 3 times the actual value. Why? Because they know the CEO of the company will take and raise more money to buy more Bitcoins, and all of the shareholders of the company will be better off. Now let's pause here for a second. I want you to pause this video and think about the ways in which this strategy can fail. Because if it can't fail, we have found ourselves a perfect company to dump all our money into. Obviously, there are some risks with this strategy, and can you think of one? Write them down in the comments, and by the end of this video I will kind of reveal the risks and what is wrong with the strategy and where can it fail. Now, the second part of all of this is how MicroStrategy are actually raising money, and this is split into 50-50. 50% of the money they are raising is by issuing new shares, as we just saw in the example, and the other 50% is the debt which they are issuing. Now, the debt they are issuing is in the form of convertible bonds, which pay very low or 0% interest. Now, to understand all of that, let's first talk about what convertible bonds are. Convertible bonds are just a regular bond, which you are paying the company the money, and the company pays you interest, and by the end of some period pays back you your money. But the convertible part states that at some price you can convert your bond to a stock of the company. Now here is the kicker. MicroStrategy issues convertible bonds with 0% interest. So they are getting money and they are not paying anything for that. And before you ask how can this be possible, T-bonds, American US government T-bonds are paying 4% interest. Why would anyone give MicroStrategy money with 0% interest? First, let me tell you that one of the biggest insurance companies in Europe, which name is Allianz, actually bought a lot of convertible bonds of MicroStrategy, and conversion price for these bonds is $672 per share. And now I'm going to tell you of why this is a great deal for Allianz. So let's split this investment into 2 scenarios. Scenario number 1, MicroStrategy goes to absolute zero. The stock falls sharply. In this scenario, Allianz are just getting their money back in about 5 years. So yes, they could have invested it in something else. Yes, they will lose some money because of the inflation. But well, that's not a very risky strategy. You are investing something, and if all fails, in 5 years, you're getting your money back. By the way, if for some reason MicroStrategy declares bankruptcy, bondholders are getting the split of the assets before shareholders. So even in that sense, Allianz is taking less risk than just buying shares of the company. Now, in the scenario when the stock soars and everything looks great, well, Allianz just paid pretty small sum of money for the stock, which cost $672 per share. So, best case scenario, Allianz is getting a lot of money. Worst case scenario, they're not risking much. Now, MicroStrategy has been able to raise a lot of debt with this strategy, around $4.3 billion in debt with near zero interest rate. So the average interest rate, I think, on its debt is around 0.8%. And with this debt, they're buying Bitcoin, just as I explained at the beginning. Now, you can see the brilliance behind the strategy. The more Bitcoin the company buys, the more valuable it becomes, the more attractive its stock becomes to investors. The more investors are buying, the higher the stock becomes, and then the company can issue more shares and buy more Bitcoin, repeating the cycle all over again. And now we will talk about the risk, and I will answer the question of what can go wrong with MicroStrategy's strategy. So you need to remember a couple of things. First of all, MicroStrategy are issuing debt to invest in Bitcoin. So they are actually leveraging your bets in Bitcoin. And I have seen some comments on the internet that people are saying Bitcoin is too risky, I better invest in MicroStrategy. When you're investing in MicroStrategy, you're actually leveraging your investment in Bitcoin. And you know what leverage is? It's a double-edged sword. If everything goes well, you can earn a lot of money, but as soon as everything goes bad, and you remember that Bitcoin is a cyclical thing, right? So Bitcoin has its ups and has its downs. When everything goes bad, it will hurt you badly. Another concern is regulation. So currently it seems that the environment for Bitcoin and for cryptocurrency is good. At least that's what Trump and Musk has been telling us over the past couple of months, but we don't know what actually will be in the law of US government or any other government in the world. If for some reason one of the major states will decide to just ban crypto mining, ban Bitcoin, it will hurt the company badly. And the ultimate risk for MicroStrategy is premium to its net asset value. And this is actually the answer to my question, what can go wrong with this strategy? Do you remember that I've said that MicroStrategy has a premium of 3 to its net asset value? If this premium becomes 1, so the company is just valued on the value of Bitcoins it holds, this strategy just falls apart. The company is issuing new shares or issuing debt, buying Bitcoin back, and nothing happens. The value of Bitcoin per share stays the same. So it's all built on this notion that people will be paying more for MicroStrategy than its assets actually worth. If you like this video, press the like button, subscribe to our channel, and if you want to help us with our research, you can use the thanks option on YouTube. That's all for now. Thanks for being with us, and we will see you in the next video. Take care.